All right, so let's get an idea where it could be possible for this Euro USD pair to actually end up. So I always start on the monthly chart. The reason why I start on the monthly chart, monthly chart is because I want to get a really good idea as to where price could be going. And the best way to do that is to pan out to the higher time frame so that you can see a bigger picture of the market. You can actually see where the market is coming from. You can look at historical data, see how price reacts off certain levels. But panning out to the larger time frame just gives you a better insight as to which direction the market is actually moving in, right? You don't have to, it allows you to see beyond just the minor movements of the market. Okay, so based on this chart, I see that the Euro USD is going up. It's on a bullish run, right? So here's why I say it's on a bullish run. Okay, let me just expand out just a little bit more. Okay, so here we go. Now keep in mind, guys, from line to line, right? This is important that you understand time frames and sessions, the different sessions. So if I'm looking at a monthly chart, I'm interested in what took place over the course of the year and how the year is progressing. I'm even interested looking at what took place last year and maybe the previous year before. And the reason why I'm interested in looking at, how the market is responding, how the market is moving at these times is because it's going to give me an indication as to where the market wants to go long term. Okay, so let's say, for instance, this section right here. So this line from this line would represent the year of 2024. From this line here to this line here is going to represent 2023. Okay, here is 2022 and here's 2021. Okay, so you may say, why are you going back that far? I'm not basing my trading decisions on, of course, what happened last year or the previous year prior to that, but it gives me a good indication as to which direction the market wants to move again long term, right? So for instance, if I go back to 2021, right, I see the market created this yearly high up here and then it began to trend down, right? And by the way, on a monthly time frame, you're going to count 12 candles because it's 12 months in a year. So the market actually, it began here in January of 2021. It meandered around here. It retested this high and then it began to pull down. It began to trade to the downside. Then you can see that during the year of 2022, the euro was really weak and the dollar just basically beat it up because the Euro USD moved all the way down. This year was the easiest year to make money trading this pair. Okay, so let's see what happened. Now it created this low of 2022 and it began to trend up during 2022, right? And then it created, so 2023 started here as the market was moving to the upside after it created the low of 2022. And now the market is just meandering along. So it's trading for 2023 and 2024. The Euro USD is actually consolidating, right? It's just trading in between these levels here. So it's pretty much just trading up, down, up, down. It should go up, may go to this level, may even break out of this level a little bit, but it's moving to the upside. And then we can expect the market to possibly go down if it doesn't continue to the upside. But the point that I'm making is once you once we would have created this high right here and price begin to move down, because this is a level of resistance from the past, you could have went short. There was a good opportunity for you to go short, especially once this pin bar was created. You could have entered the market here and rode this market all the way down for about, let's just call it 370 pips, right? And then once the market came back to this level of support, and then you received this indecision candle for the month, you could have bought it back in. You could have bought it back up for about, let's call that 560 pips, right? So now the market is consolidating, right? But what do I notice? I notice that these lows are getting higher. These lows are beginning to trend higher, creating higher lows. So the market is, while it's still consolidating, it's moving to the upside. Now we don't know what's going to take place once the market gets back in this area here, in this area. So it may come out of here, it may reverse, but we have an idea of what the market wants to do. And guys, that's what the monthly time frame often gives us. It gives us the big picture as to where the market wants to go. Okay, so let's go down to the, let's drop down to the weekly. Okay, so now that we kind of figured out that the market is beginning to trend up, we can look for buying opportunities in this market. To just buy, you just want to buy, you just want to follow the big trend of the market. And you should be, if you trade following the big trend of the market, you should be, you should have some really good trades. You should be able to become profitable if you're always following the trend. Not necessarily the trend, but if you're trading with the big banks or following the big trend of the market. Because once you drop down to the smaller time frames, the trend can change. It can, you can be in an uptrend and a downtrend, because we all know the market does not move in a straight line, or it doesn't, just trend up. The market, you have buyers that buy a little bit, and then once they take their profits, they're giving some back. Or if they don't find, if the buyers don't find any value to continue to buy in this area, price will drop down, because it has to create value in order for price to go back up, right? So you have the buyers have to find value in the price. Okay, always remember, guys, when you're looking at the charts, these aren't necessarily you gotta also recognize that yes, these are candles, but these represent price. This represents the money, So if I bought something at $2, right, and now it moves up to $10, well, I'm not going to continue. I'm not going to come back and buy it again from $10 for $10. I'm wait till it drops back down. If a lot of people are buying and I don't see $10 is just way too high for me to keep buying this product, I'm gonna wait till it gives me a discount, because I want to keep buying it, but it has to give me a discount, has to give me a reason to continue to buy it. So that's what's going on when you see pullbacks. That's one cause of the pullback. It could be people that bought here, they're beginning to take their money out of the market, not necessarily retail traders, but it could be major banks that bought here, and now whatever reason they bought for, their deal is done, and now they're beginning to take money out of, close their positions. So the market may suffer these pullbacks as well. So just a couple reasons why pullbacks happen in the market. But the moral of this video is to just always remember to pan out to the larger time frames, get an idea of where the market wants to go, and then you'll be better served when you're trading your shorter time frames, like the 4 hour, the 1 hour, or even the 15-minute time frame, as to the big direction in the market. So when you get to these major levels of support or resistance, you can confirm that you can have a higher probability trade. You can be more confident in your trades, because once you get to these levels, if you're in line with the big trend, you can go ahead and take that trade with the idea that the market is going to either reverse and get back in line with the major trend. So yeah, so that's just, a different way of looking at the market. I hope this video gave value and served, some kind of purpose to your trading. And if you like the video, please subscribe, like, and share this channel. Alrighty guys, I'm out. Learn and trade Forex.